President Trump delivered great news for stock market investors after a weekend of high-level talks and meetings with the US and China. I'll talk about the details of that deal. There were light on details, but I'll talk about what it could mean for stock market investors overall. And I'll highlight some of the biggest winners from this deal, some of the biggest stocks that will be winners as a result of this thawing of relations.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the US and China agreed on Monday to ratchet down the tariff war for 90 days as each economy begins to feel the pressure of the bruising penalties. And I've been talking about how US companies buying things from China, that had all but come to a complete halt, except for the products that were on the exemption list that were exempted from these tariffs, because prior to this deal, at a tariff rate of over 145%, US companies were not importing Chinese goods anymore. They were trying to limit that completely because it made no sense at 145% tariff. They were not going to be able to sell those products profitably in the United States. So they needed to stop orders. They needed to send those products to other parts of the world if they could. And business from that area was stalling significantly. So after a weekend high-level meetings in Switzerland, the U.S. will reduce the reciprocal tariffs on goods from China to 10%, down from 125%. But the separate 20% tariff imposed by President Trump over the fentanyl trade will remain intact. So in the end, the tariffs from the U.S. to China on imports is now 30%, which is a lot more manageable. Businesses can manage a 30% tariff without significant disruptions. They can ask their suppliers to absorb some of that increase. They can make some price increases. They can change some features in their products. They can do some things to manage a 30% tariff, right? But at 145%, there wasn't a way to mitigate that. That's too large a number too quickly for companies to mitigate. So as a concession, China will cut its retaliatory tariff on U.S. goods to 10% from 125%. And as a result of this announcement, stock markets are soaring this morning. The major indices are up around 3%. Specific stocks like Tesla, Amazon, Walmart, Apple are up big. And those are some of the biggest winners from this trade. So let me talk about some of the companies that will win and benefit as a result of this trade, starting with some of the biggest beneficiaries, which includes Apple. Apple sources a large percentage of its products from China, imports a large percentage of its products from China, and this pause in relations gives Apple time to adjust. It has manufacturing facilities in India, but with the tariffs being implemented almost immediately, there was little it could have done. But now that it has 90 days, it can spend that 90 days ratcheting up its manufacturing base in India, expanding its production capacity there. And so by the time the 90 days are over, Apple's manufacturing in India can increase by some percentage and also be on its way to increasing by a larger percentage. Furthermore, it will give Apple time to adjust to the changing macroeconomic conditions, respond to consumer behavior, see if there's any local manufacturing in the United States it can use, although that would be unlikely since the costs are so prohibitively higher manufacturing in the United States compared to sourcing products outside the United States. Nevertheless, this will be good news for Apple to be sure, and the stock price is up over 5% as a result of this announcement. The next two companies I'll talk about because they're similar is Walmart and Amazon, which stand to benefit significantly from this deal as well. Both Walmart and Amazon source a large percentage of their products from China. And so those tariffs were going to be very bad news for its business that relies on the products that are sourced from China. Now, I talked about how because they are international businesses, they had some mitigation strategies like sending their products that were sourced from China to other parts of the world that did not have tariffs imposed on them, and they can bring in products locally and shift some production. More so, Amazon had more flexibility than Walmart, but they both had some flexibility in terms of how they can manage this. But regardless, it was going to be bad news for their business overall because they source such a large percentage of their products from China. Third-party sellers, both on Walmart and Amazon, source their products from China. And so they were going to have to increase prices on their platforms. And it was uncertain how consumers were going to respond to those higher prices. How much would they pull back their spending in response to the higher prices? Now it gives these two companies more time, again, 90 days to adjust to these changing circumstances, increase their sourcing from outside of China, and also build up their inventory from products from China so that it can also give them even more runway so that they can adapt to the changing scenario, reduce their manufacturing reliance from China. And at the end of this, they could be alleviating a lot of this risk by sourcing products from other parts of the world, which will be more expensive to be sure, but not as much as 145% tariff, which it may or may not, the pause may or may not be continued. The 145% may be implemented again after the 90 days if there's no progress. And so that's something to keep an eye out for. And then Tesla will also benefit from this. Remember, Tesla has about half of its manufacturing in China, right? And in the most recent earnings call, Tesla talked about how its energy business, which is thriving, it's actually the only one of the only parts of its business that's thriving. Remember, EV sales are falling for Tesla significantly, but the energy business was doing very well. The company highlighted that the energy business is even more exposed to tariffs than the electric vehicle business. And so these pauses and reductions in tariffs will also give Tesla more time to adjust and adapt the capacity, the sourcing, etc. And you can see Tesla stock price is up significantly today as well. But even besides the companies that I highlighted in this video, there will be many winners. There are so many companies that are reliant on the imports from China, even advertising companies, because the companies that are advertising on platforms like Alphabet, Meta, Pinterest, etc., many of them are businesses that are selling products that are sourced from China, and that advertising revenue would have been diminished without this kind of a deal. So this is great news for stock market investors overall, and especially for some of the companies I highlighted earlier. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.